I'm going to show you how to use order blocks to find a good setups, and those repeat every day, all the time, and on any time frame. What we're looking at are both bullish order block and a bearish order block. They're kind of like a mirror of each other. And an order block are series of down candles before the move higher. That's for bullish, or series of up candles before the move lower. You'll find these in the bearish move down and then a reversal going higher. Usually there's a green candle right before these and a red candle right before those. Or as part of an uptrend where you're having green candles, a pullback, and it moves higher, or going down, moves higher and drops. The main thing about order blocks is that they support price. So if we're moving higher, you're always expecting down candles to support the price moving higher, all the way up until they hit a certain target, and then they show a reversal. How do they reverse? They flip into a bearish order block. And same thing, they'll be moving down until they hit target, and then reverse moving up, forming a bullish order block. Knowing that every red candle will support price if the price is above it, and every green candle will push price lower, that helps us frame a setup. Knowing that, let's take a look how we can use order blocks to find setups in an easy way. Let's move to 1 hour time frame, and let's remove the drawings. Let's find the lowest order block. So we are on the 1 hour. Right now, the lowest one is this red candle. If we draw a line from the open all the way up, see there, you see the price came in and moved higher. Same thing, well, from the open up, came in, moved higher. Draw the line here, came in, moved higher, and I'll talk a bit more about this one. This one did not go above it, it went above that one. So we'll draw this one here. That's in its simplest term. What are the levels for an order block? It is the high, the open, and the middle of the body, if there's one. If there are more than one, you take the high, the open of the highest one, and the middle of the sum of all bodies. So the open of the first one and the close of the last one. I usually mark the open, and then I will eye the high and middle, but those are the levels you wanna watch. How do you trade these? And how do you know to find a good setup based on these? If you just plainly take a trade here, it's a little bit risky because all what you know is price coming down and you don't know if it's gonna stop here. If you're looking all the way down here, is it going to come through or not? Now, obviously, we had a change of character, so that kind of gives indication it's going to go higher. But we need to refine our entries, and we need to take a high probability type setups. Let's mark those areas where it's retested it so we can drop on lower time frame and see what they're doing. Here, we said we're going to come back to it. It dropped. Let's mark the 50% line. I'm eyeballing it from top to bottom, somewhere around there. We draw a line out. And with that, if you want to get the exact one, you can use a fib line and draw it. Let's just leave it there. This is the 1 hour. The 1 hour gave us the order blocks that we want to key off. Let's drop to 1 minute. And you can drop to any time frame below the 1 hour, usually 5 minutes or 3 minutes, 2 minutes, and so forth. We'll start with that one. What do we have here? The order block open was there for the 1 hour, and price moved away from it, went all the way higher, and came back and retested it there. So how do you trade it? If you form an order block on 1 hour, you're expecting the order block to support price higher. So if you drop to a lower time frame, When it gets to that level, we start looking for a setup in the form of a reversal. And whatever your setup criteria is, it could be based on inverted fair value gap, based on order block on the 1 minute or 2 minutes, 3 minutes, or 5 minutes. It could be the fair value gap plus market structure, inverted fair value gap, and breaker, unicorn, whatever your setup is, you're keying off a higher time frame level in the form of order block, high, open, and the middle, or the low, open, middle in case of the bearish order block. Price came in here and it reversed. And if you see your criteria here, if it's based on inverted fair value gap, based on an order block, based on a fair value gap and reversal, you can take your setup and define what it is. And you can target higher. You can, depends on, again, your criteria. If it's based on that order block, your target is higher, and so forth. You'll be able to find your setups anywhere in here after it hits that order block. That was the bottom one. Price came up. This is the drop for the second order block and moved to higher. It came back. It tested it. And what did it do here? First time it tested it, came back higher, but it did not give us a reversal. If you did trade it based on inverted fair value gap, you should have accounted for all the fair value gaps, but let's say you traded it here based on that one and you got stopped out. It's okay. You wait for it and you find your next setup. This towards the end of the day, you may have not traded that one, but the setup's still there regardless. Next one, price moved higher. And now price came down. The open was here, and that was the middle of the body. It came to the open. It showed sign of reversal. And what did it do? It did not give us a setup. Again, if you're trading the inverted fair value gap and you do not wait for an order block or bug structure, you may get stopped out here and you have to wait for your setup. Next level is here, came down here, consolidated and reversed, retest and go higher. That also could have been a trade for you, depending on your criteria. You can do 2-3 hours, whatever the setup gives you. Now, targeting will depend on what's going on, what's your analysis, if it's bullish and how much time. However, you can always rely on some kind of a reaction. Let's see, do we have a third one? There's another one there. This is currently as of Friday. So in this case, it came down. It may have given us a setup, but it did not target the high. So let's say we took an entry here and we could have probably targeted there or so forth. And as you can see, this one did not work out. You cannot expect every single one of them to work out. What you're looking for is higher probability type setups that you can get 50, 60, or 70% correct. In this case, this one did not work and it's showing sign of reversal. As you learn price action and as you learn tape reading, you'll understand when to trust it and when not to trust it. So for example, in here, this reversal was a little bit obvious and it's going into a gap fill. It's going into a higher time frame and it's bouncing off a fair value gap. So that was a little bit of a risky move right there. However, even if you did not know that and you traded it off the 1 hour, this will give you a higher probability a trade because order blocks on 1 hour and higher, they tend to be very strong and very effective in supporting price. We're expecting them to keep pushing price higher. If you look at the market structure and you see it's trending up, you can trade bullish, trending down, you can take bearish. You define it that way, trying to eliminate as many false positives as possible. When do you avoid that type of setup? Well, usually if you have consolidation right above a fair value gap, for example, and it gives you a bearish type setup. Let's assume we broke below this setup right here. For example, the bearish setup, let's take a look at it. Let's remove these. In this case, we're getting a setup going higher and it inverted right there. It did into a fair value gap and in a bullish trend. There is a chance that this way may not go all the way down because this push down is just to revisit fair value gaps. You want to be careful with those type of things because that could be just a retest of the fair value gap and it's going to resume higher. It probably did give us a good risk reward even on this one, because if you look at the middle and we drop to 1 minute example, right there, you have plenty of room to take a setup from here to here on 1 minute based on 1 hour because of the difference in time. If you take a trade from here to there, that's probably have 4, 5, 6 hour, even though this is against a trend, but you cannot target there, or you just want to be careful targeting a lower level. So right around a fair value gap, if you are going into a fair value gap in a move higher. The other ones to avoid are large wicks right after order block. So sometimes you'll have an order block and the price will wick a few times through it. Let's see if we can find one. Let's take this one here. This is the highest order block. What you've noticed here, now obviously there's this one here. Probably would have assumed that's order block, but we'll use this one for example. When you see wicks through an order block, it becomes lower probability because it went through it a few times. So the question is, why is it wicking through it? I would probably skip that one. If that was the highest order block, we did not have that one. You want to be careful with large wicks and avoid those. The other one is if your price moves away and does not give you an entry. Let's see a strong move away. Like here, you had a bearish order block and price moved strongly away. Sometimes they come back and retest it and resume lower. You just want to know you are in a good trend and your bearish trend, and this is just a retest. Otherwise, you could avoid it if you are not sure. It's still good to look at it. For example, let's assume we looked at that one. And let's say do replay just to get us there faster. And do 1 minute. What happened here? We came back, retested it, and we dropped. Do we have enough of a trade? Let's say we took it off that one here. You still have a 2R. We cannot assume we're going to go all the way down. Eventually came up and dropped. You want to be careful with these things. You want to make sure you have enough room. If it moved away, did it reach a target that's trying to do, and now it's doing full reversal versus just a small retest and then continuation. To recap, you can do 1 hour order block every time close above red candle. The high, you always focus on the high, not the open. So you want to close above the high. Then you wait for retest of that order block. If it keeps going and it does not give you a retest through it, and by the time it goes through the middle, then you leave it alone. You want it to retest and reverse on a lower time frame at the high, at the open, or middle, or at the low, at the open, and at the middle for a bearish. And you're looking for the highest close or lowest close for bullish and bearish. Hopefully that helps, and let me know if you have questions.